When you're looking at the 20-year and the 30-year, that's saying, yes, we believe that there isn't going to be sustained inflation, that it is going to be, at least 5 years out, we're going to be fully recovered. And so I think that's what we really need to look at longer term is just, that's why I'm saying more 1 to 3 years, because the bond markets are definitely indicating no massive long-term recession. Just some difficulty with inflation.
What does Jerome Powell do? I think that you guys are the experts, but as you know, I play one on TV, and I've been noticing that Powell, maybe it was his remarks yesterday, again today, he's feeling his oats a little bit. He's got a little bit more job security for 4 years. He might go on a bond market tear here, aggressively raising rates, speeding up the tapering to get ahead of this thing. Is that a worry?
I think right now the market doesn't appear to be too worried. You look at the 10-year Treasury yield, under 1.5%. They're not very concerned, and I can't really figure this out.
They should, because they're not always, Mike, Nostradamus.
A 1.5% 10-year yield versus a 6.1% annual rate of CPI inflation. Right. We haven't seen a situation like that with inflation so far above Treasury bond yields. The last time was 1975. How long does
it take in the past to correct, to recalibrate?
Well, what will happen is eventually, the Fed's going to be forced to start hiking rates, short-term rates, Fed funds moving well above 1%, 2%, whatever it might be. And as I said, the 10-year yield has to more than double where it currently resides.
And it would still be low.
Yeah, it was still relatively low historically, but that's quite a jump from what we've become accustomed to what the equity market has become accustomed to, and to what home buyers have become accustomed to. That would be somewhat of a shock and would definitely lead to a slowdown, interest-sensitive spending, and make matters difficult for equities.
Aaron, final thought on the markets had a strong year, unless they go kablooey in the next few weeks.
Yep.
Normally followed by a weak year after that. Of course, they said that last year going into this year. So what are you looking at for 2022?
I think it's time for maybe what we call a consolidation. So, definitely more of a sideways pattern. So we'll see these up and down days. I think that would actually be healthy as we readjust to figure out what is really going to be the growth. But this doesn't mean it has to be a down year. It could just be, I'm predicting 0 to 5% next year. So just,
not bad.
Yeah, just slightly up, but certainly not these double-digit gains that we've seen.
That was our birthright.
Yes.
We had it coming. Guys, I want to thank you both. So good seeing you all again.